So welcome everybody. We're just gonna wait a few minutes until well, everybody gets here. So it'll take like 3 minutes or something like that. Yes, so I think we can start. So usually on Mondays we look at what are basically the headlines for the day. So I always go on investing.com. I use also the Financial Times. I also use the Economist and so on. I basically use most of the main website, but especially investing.com is a website I use all the time in order to get you news. It's basically on constantly. So first of all, there's news from Japan that is basically Japanese economy is doing much better. We're also going to look at that data, and of course that has quite a big impact on their currencies and so on. And if Japan is going well, then you should also expect better data from most of the other world economies. So they're the one first with their GDP numbers and so on, and they're looking quite good, actually 3% above expected. And then we have the US dollar that is continuing to depreciate, and probably the main reason for that is because people are putting money into cryptocurrencies. They have fallen very aggressively on Sunday. They fell roughly 10%, most of them. The smaller ones and the bigger ones fell roughly 5% to 7%. So, but they have already recovered. So people are buying into them every single time that they have these major pullbacks. So they rally 30% and then they fall by around 7%, and then people continue to buy them. So people are not buying the dollar, they're buying cryptocurrency, and also people are not buying gold because gold is also falling at this point. So those are quite important headlines. This could be a proxy for the rest of the world economy. It is still going really well in Japan, and therefore it could also be going really well for the rest of the economy. And the US dollar continues to depreciate because people are basically flocking over to cryptocurrencies. So if you look at the economic calendar, you can see the numbers from Japan. These are the expected numbers or the forecast numbers. For example, third quarter for GDP in Japan was 12.7 and expected number was 9.5. If you don't know where you find the economic calendar in investing, you go to tools and then you have the calendars here. The first one is the economic calendar, and they're extremely useful in order to just see what basically is going to happen in this week. I only look at the ones that are 3 stars or 2 stars because this is information that is important and that will most likely have an effect on the economy. So you'll see a lot of volatility when these numbers get released, and then the volatility slowly, gradually declines. But it is important to see because you can basically ruin your stop loss and so on if you're on the wrong side. So most important thing here is the GDP numbers for Japan, and they are 3% higher than or at 3%, and that is fairly higher than expected also here. So So looking on Monday, there's not a lot of news here on Monday. Probably the most important news is down here in Australia, there where the Royal Bank of Australia is basically the minutes. So they will pronounce their usually their interest rates and so on, but don't expect any central bank at this stage to be changing any interest rates whatsoever. So they are going to be technically the same, and most of the world economies will continue to spend money in order to get the economy going again. That's the same in Europe, in the United States, and most likely also over in Australia and Asia. So then we have Thursday. We have the sentiments from Germany, and usually you can basically say this is a sentiment for the entire European Union because it is just it's just such a big part of the European Union. Of course, this will have major implications for the euro. If their sentiment is very high, then optimism for growth in the future is also, it basically means that it's going to be high, and therefore people will start buying more, and yes, that will have an effect on the euro, on demand for the euro. So we need to go to Wednesday in order to see a real economic data that has importance. Here we have 3 stars. It's the inflation numbers for the United Kingdom, and yes, that is all usually expected to be one less than before, 0.5 compared to 0.6, and that should be paying attention to, because that will have an effect also. If a higher number will be bullish for the Great British Pound, and the lower number usually is a bearishness for the Great British Pound. So the Great British Pound at the moment is rallying significantly compared to the US dollar, and therefore you see that currency pair increasing. So we also have ECB policy. They're usually very clumsy with their pronouncements. But at the moment, don't expect anything significant there at all. Then we have U.S. Core retail sales. So this is important to see how the U.S. economy is going. It's basically a proxy for GDP growth in the future. And then you also have CPI numbers for Canada. So technically, the real important data will arrive on Wednesday. And then you have, of course, on Thursday, we have jobs numbers and so on in the United States, initial jobless claims. So they did increase last week. They haven't had major effect, to be fairly honest. Usually, as I understand it, is basically the Federal Reserve that is basically pumping up the market every single time you get very bad data out. So if that is true or not, we don't know. But these numbers here have not had significant effect on the stock market whatsoever. So let's look at TC2000. So we are going to look at this technical indicator here. This is the stochastic oscillator, and yes, it is an oscillator. It's basically, it measures momentum. So first of all, we have 2 lines here. We have the signal line, which is the broken line here, and then we have the stochastic line, which is the blue line. And you can say this, make it very easy. When this blue line is above the signal line, it is indicating a bullish momentum. When the blue line is underneath the signal line, it's indicating bearish momentum. So it is a very, very important indicator to look at. I basically look more at the stochastic than any other indicator. So it's technically the stochastic that I look at. And the reason for that is basically, it technically shows demand for a certain instrument, whether or not it is for a currency pair, for stocks, indices, and so on. It basically shows whether or not there is demand for this instrument or not. and that has major effects on the price of the instrument. So if the willingness to buy, if there is a lot of demand, you will see a crossover of this signal line here, and that is basically an indicator of the trend is going to change from being bearish to being bullish. The same goes for here. When we cross underneath, it is an indication that it's going to become from bullish to become bearish. We also have two lines here. We have one at the 70, this green line, and we have one here at 80, and then we have one line here at 20. Some indicators, some platforms have it on 30 and on 70, similar to the RSI and the RSI, for example. Here it is at 80 and 20 in default, so you can always change it if you want to. But well, basically these lines are saying that when you cross these lines, it is extremely bullish, and expectations also for change in this trend should be higher. So when you see something like this, when it's trending way above the green line for a long period of time, also here, you can also look what basically happened. So this is where we trend just above, where we start trending above, and this is also when we are basically rallying. So this red candlestick here is basically this fall, then we rally again, and then we're above the 20 moving average here in the Bollinger Band for a very long time. So when you see these kinds of fall, then you also have these massive falls in the stochastic. So usually when I look at the things that is going to change in momentum, I look at the stochastic in the 4-hour chart. So if I want to see whether or not something is going to change in direction, I usually don't look at the daily chart. I look at the 4-hour chart. So you can choose 4-hour, and that technically gives you a fairly good indication whether or not something is going to turn around, or to become bearish or to become bullish. You can also look at the 1-hour chart. That is also very useful. So it gives an early indication of whether or not something is going to become bearish or to become bullish. So what we're looking at the moment is the New Zealand dollar and the Canadian dollar. And this was one of those currencies that we looked at on Friday because it was basically testing major support, whether or not it was going to rally from there or it was going to break down. So we initially rallied this morning, and then we broke down. We did rally on Friday, so we were basically here when we were looking at this. It did rally, break down, and then we basically got stuck here at the 20 exponential moving average. Today we are breaking down, but we are not. It is not expected for this to go much further. We can see that we are getting very close to the bottom of the Bollinger Band. The last time we were there, we rallied, and it is fairly likely that we'll do the same thing now. If we go much further down here, then we'll probably see something similar to this. So we can see that on the 1-hour chart for the stochastic, it is still very bearish. So expect this to continue to go down as long as this line is underneath the red line. So as soon as this breaks and goes up and breaks and crosses the signal line, expect this to pull back. So that's the way you basically use the stochastic. You can technically just sit here and wait for the stochastic here to turn around and then cross the signal line, and then you will see this basically pop up. You can also look at the 4 different time frames, and you will also see that happening even quicker in the 15 minutes, in the 30 minutes, and also 1 hour time frame that it will basically pop up. So it should be turning around very quickly. If you look at the 1-hour chart for the New Zealand dollar and the Canadian dollar, you can see that we are testing an area that has been support in the past. We ran in support there, also there, there, and there. So this area of 0.91468 is an area where we have broken down and then rallied from there. So I basically put this square here last week, which was basically an area of interest, and you can see that in the 4-hour chart we have broken down quite significantly here from the 100 moving the 40 exponential moving average it should be, but we're still testing this area. If we break below this, if we get another 4-hour candlestick that goes underneath here, then yes, we are going to see this go significantly lower. But that's how technically you use the stochastic. It is a momentum oscillator. If the blue line goes up, crosses the signal line, that's an indication of bullishness. If the blue line goes down, crosses the signal line, that's an indication of bearishness. When we are above the 80 number, then it is very, very bullish. When we are underneath the 20 number, it is very, very bearish. So we looked at a few currencies last week, and this was one of them. So it did rally, but now we can see that it is breaking down yet again. We should expect quite a lot of support in this area because we have been here several times before. We're at the bottom of the Bollinger Band. Expect a pullback from here within the next few hours. We also looked at the Great British Pound and the US dollar. We can see it here. It continues to rally. Main reason there is a lot of demand for the Great British Pound. As you can see, the UK 100 is rallying significantly today. Should not have closed my position on Friday, but we are rallying and it's way above the signal line. Now the 20 exponential at the moment, we are getting very overstretched here in the Bollinger Band, and we're getting on the edge of being overbought. So we may see the UK 100 continue to rally today, but when that turns around, demand for the Great British Pound will also fall, and if the US dollar starts appreciating, then that will be extra bearishness for this market. We can see that how bullish this market is. We are in the 1-hour chart here in the stochastic, and we are above the green line and have been that for a fairly long time. If you look at the 4-hour chart, it is still very bullish. If you look at the daily chart, it is also very, very, very bullish. But we are getting very overstretched here, and as you can see, said yes on Friday's session that a pullback towards the 20 exponential, that is where should be possible to enter this market. I would never ever enter this market at this stage because it can fall at any point, and therefore you can basically get stuck here, and that is not the point. The point is to enter the market where you find major support, and that you should find here at the 20 exponential, at the 40 or the 50, because in historical data, that is basically where we have found support in the past. We found it here, 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 also here, and so on. It has basically been bouncing off these 3 moving average now for a very long time. So the other currency that we were looking at on Friday was New Zealand dollar and the US dollar. It was here. So as you can see, we did rally on Friday, as was expected as well, and today we are breaking down quite significantly, mainly due to the US dollar depreciating. And yes, you can see, for example, the stochastic here, it has crossed the signal line, it's under the green line, and that is an indication of a bearish momentum. Therefore, you should expect this to at least test the 20 exponential, or in best case scenario, test the worst case scenario, I should say, test the 50 and the 40 exponential moving average, which is right here at the 0.71 level. So that is most likely where this will turn around, because then you will be underneath the the moving average here in the Bollinger Band, and probably if we go all the way down to these previous levels, we'll hit the bottom of the Bollinger Band, and then it will very likely turn around in that area, because historically that has been an area of support, and usually it rallies from there. You'll also have a very low RSI, and other technical indicators will mostly show signs of turning around, so especially the stochastic here. So then we also looked at different kinds of stock, and it's probably more interesting today to look at them, how they basically behaved after the US session was basically finished. So one of them was Akam Technologies. So what we were looking at here was a stock that was testing on Thursday was testing the 300 moving average. And the idea here was to start buying this. And the reason for that is because we were way outside of the Bollinger Band here, where we're very close to being overbought. And I said also on Friday that you should technically wait for this in order to see whether or not it will start rallying. And as you can see, it is start rallying now, and it is looking far more bullish now than it was on Friday. Stochastic is still bearish, the MACD is still bearish, and the CCI is still bearish. But if you look at the 4 different time frames, we can see that we are starting to turn around. It's starting to level off here in the 30 minutes, half an hour. The 50 minutes is also starting to level off. This breakdown is starting to basically level off. And usually what happens after that is that we have a rally up towards at least the middle of the Bollinger Band. And if we try to estimate that, that is, get rid of this, that, and this. So if we try to estimate that, that is around, at this point, give or take, around 8.9 or 9% to the upside. So we may see this rally up towards this area and then break down. So around $10 to the upside before breaking down. That is possible. Stop loss right underneath here in order to secure your trade and then target the upside. That is something that I'm going to look at. You can also look at the 4-hour chart here in stochastic, and as you can see, it is starting to level off. It is about to cross the signal line, and then it will most likely cross the red line, and then we'll continue higher up towards the middle of the Bollinger Band. So a fairly good trade if you have a very tight stop loss right underneath here if it should go south. So then we also looked at Cardinal Health, and this was a trade that we did, I think it was 2 weeks ago. No, not 2 weeks ago. We did it here, so it was basically at the beginning of last week. So the reason why we entered this trade right here is because we ran into support. We were way outside of the Bollinger Band. We did buy it and sell it. That was a profit of roughly, I think it was 2.5. I think I left that trade. Since then, it has broken down. We are down from there 3.69%. And at the moment, we are again entering territory which should be very supportive. We are trading underneath the 300 moving average, but we are getting very overstretched here. We are getting very overbought. And if we look at the 1-hour chart, for example, for the stochastic, we can see that we are about to cross the signal line here and head back towards the highs. And that is an indication that we may rally up towards the middle of the Bollinger Band. At this point, should be 4.47% right here at the 50-moving average. So it may take several days in order to get there, but for example, the stochastic is turning around, and that is a clear sign that it's going to become bullish. So, but pay attention to the stochastic. This is basically a day where I focus a lot on stochastic. 1 hour chart is showing signs of bullishness, but the daily chart is still not showing sign of bullish. So it's probably where we can wait one day. If we manage to break above these moving averages again, then it's a much better sign that we are going to go higher. So the last one we look at was CERN. So this fell even further. So now we are entering a territory where we are significantly overstretched here in the Bollinger Band and also overbought here in the RSI. So this should be a very interesting trade when the US stock market opens, because this is a trade where I expect this to go roughly 6.6% to the upside when it starts rallying again. We can see how bearish it is here in the stochastic. We have tried to rally up towards the signal line and then break down constantly. It will not start rallying until we break the signal line here and head towards the red line and above that. That's when we will see this turn around towards the 50 moving average first. That's up to around $3. And if we manage to break the 50 moving average, then we will probably go towards the middle of the Bollinger Band, which is right here, and that's up around $5 where we are at this current stage. But these technical indicators have to turn around in order for us to go higher. Yes, so that's what we basically looked at last week. We did have some other things on the calendar. Pepsi was also on, was one that was very interesting to look at. We can also take that one. PepsiCo. So this one continues to fall. There's some room here in the RSI. We're at the 35 at this current stage. Technical indicators are still very bullish, but we're still outside of the Bollinger Band. So at this point, this is not a trade I would enter. It basically needs to turn around here, but we are in a very bearish momentum here in this stock. So if you scan for the other trades that are possible today, we look at this one. So this is AEP. So this one is also outside of the Bollinger Band. We are significantly oversold at this point. Stochastic is bearish, the MACD is bearish, and the CCI is bearish. So this is not a good stock to enter, to be fairly honest. We could see this go further towards these levels here before turning around to the upside. But at this point, it is just a pure gamble in order to enter this trade at this point. So let's look at the next one, and this one I thought was looking very interesting. So this is DVA. So we have fallen quite significantly on Friday, all the way down to the 100 moving average. So if you look at the Bollinger Band, we are way outside here. So it is overstretched. People have been basically panic selling here, and it's gone way outside. But there is no body here, so that usually means that this could fall even further. But the RSI is at 24. That is very, very low for a stock. If we break below the 100 moving average, we could go all the way down to the 150, and that would mean that the RSI would go to single digit. And after that, it is very much more likely that it will rally. It is very likely to rally now, but it'll probably take 1 or 2 days in order for this to turn around. So what we're looking for is probably we'll have another red candlestick here and then a green candlestick here on Tuesday, and that basically means that we will head back to the upside. If you look at the stochastic for the daily chart, we can see that it is turning around. We did rally here up towards the 20 exponential and then broke down very significantly. So this is a fall of roughly 8.37% from the highs here. So a very nasty fall for this stock. Yes. So at this point, the idea for this is to watch what basically happens when when the stock market opens. If we get a green candlestick here, then this could basically be the bottom. Uh, could also look at the 4-hour chart for the stochastic. That is still very bearish. If you look at the 1-hour chart for the stochastic, it is still also very bearish. So it is very likely that we'll see this continue to fall for a big part of the day, and then probably tomorrow it will rally if we see the stochastic and MACD and the CCI turn around. If you look at the 4-hour chart for this stock, we can see that last time we broke down like this in the 4-hour chart, we fell all the way down to the yellow line, which is a 200 moving average, and also underneath it. So we could see something similar to this and this and this, that we have another day or two where we go underneath the 200 moving average, find support, and then head back to the upside. So yes, but in the short run, in the 50-minute, in the half an hour, and also 1-hour charts, it is very likely that we'll see a fall in the beginning of the US session. So, you have any questions? Do you have any stocks or indices that you want me to look at? Or cryptos? Yes. Have a look at the at the other markets, for example, the cryptocurrency market, which is fairly interesting today. We are here. We can just go on intro because they have most of the cryptocurrencies here. So this market has been extremely volatile the last few days. It has basically been, people have, as I see it, people are taking basically their money and not investing in traditional stocks they have been investing in for the last few months. For example, Tesla and Neon and other tech stocks. They are more investing in cryptos. So there has been so much news about cryptocurrency market the last few weeks or even months, that the people are just putting their money into these cryptocurrencies. It is a very, very risky investment, to be fairly honest. I have done but I've done 2 long-term investments into 2 of these cryptocurrencies, and it is a very small investment. And the reason for that, I also invest for a very long time, is because to trade it short term is almost like gambling. But if you invest in the long term, you can basically get rid of most of this risk, and expectations for many of these cryptocurrencies are, well, they're crazy, to be very honest. Whether or not they're true or not, that we don't. It's impossible to know. Ethereum is expected to go to 50,000. Yeah, probably. And Bitcoin is expected to rally to what, it's for 250,000 or something like that. And many of those analyses are because they compare it to gold, and that it will be just as valuable a market cap as gold. And I don't really know if that's going to be the case. The big problem with these cryptocurrencies, I think, is that when central banks are going to introduce their electronic currencies, it will be very difficult to have all of these cryptocurrencies going on. They will probably have some of them, but I can see that it's going to be up those electronic currencies and also the cryptocurrencies. So we'll probably have Bitcoin surviving and some of the other big ones, but not all of them. So most of this market has fallen today, and the reason for that is because it has been rallying so ridiculously. We can just look at ADA, which has had a lot of news recently. We can look at the weekly chart for ADA, and as you can see, we have just gone parabolical. So we went all the way up to nearly $1, and then we fell towards to 60, 66, give or take. So it lost around 40% of its value in, well, in 2 days, something like that. So that's the reason why you should invest long term if you invest this. It is extremely volatile, and it's very easy to lose technically all your money if you just invest this in short term. If you buy it, sell it, and then technically panic sell it and so on, that is very costly. But the thing is with most of these cryptocurrencies is that they are finding floors. So for example here, it usually when you look at a commodity or a stock, you should expect this to find support here because this is the previous highs of this candlestick. And that's also what you find here. So they are behaving more like commodities now and than they have back in the past. In the past, you could basically see this lose half of its value in a week and then not recover. This is recovering, and that is technically something that I noticed that is new for these cryptocurrencies. So the one that I invested in was Litecoin and Ethereum, and mainly the reason for that, I could have basically chosen any one of these. The reason why I invested in them is because they have been around for a very long time. They're established, and PayPal is going to technically use them. So there will be a part of that platform, and therefore they should be much more common to people to use when they become a part of PayPal, for example. Yeah, I can look at Amazon and Baba. Sorry, I just saw that right now. You can look at this. So it's there. Yes, if you look at Amazon. Yes, the thing with Amazon is that it has been breaking down towards the 150 moving average here for basically once in the last few months. So this was back in January where it fell very aggressively. Then it rallied, and now we're pulling back yet again. And the 50 moving average has proven to be very supportive. So this is not right to enter this at this point, to be frank. You need to see these technical indicators to turn around before entering this. They are still very bearish at this point. But it is not very likely for this to fall significantly lower than the 150 moving average, which is the purple line here. The mark for that here is $3,191 a share. So this is an entire area here which is very supportive, but it can fall towards these levels. This is a promising candlestick, but I would wait for these technical indicators to turn around in order to start buying into this. And also, it is not rallying significantly high. So expect this to find support, not resistant, around this area, which is the top of the Bollinger Band. So it could rally, give or take 4%, something like that, and then find resistant and fall back down. So it's technically trading sideways at this point. It's not very in uptrend. It's basically trading in a square at this stage, and we're basically in the middle of the square. Entry for Litecoin. It is very, very hard to say. I would basically not want to answer that question basically because I think the cryptocurrencies, it's a very, very, very risky investment. It could basically go to zero at any point, to be fairly honest, and therefore you should not invest a whole lot of money into some of those cryptocurrencies, especially the smaller ones, because they can fall apart at any point. So what I did was I looked at two of them, which I thought were probably going to be the ones that are going to survive in the long run and also have fairly good probability of growing beyond 1,000 and beyond that. But I could be completely wrong. So that's the reason why I haven't put a lot of money into it and so on, because it's just there's nothing behind it. There's technically no real value behind it. The reason why it's growing as fast as it's going at the moment is because people are, it's all of the good news, and basically people are just flooding the market and want to be part of it. So herd psychology, to be very honest. So we're looking at BABA. I think I have it here on. So Alibaba is here. Oops, sorry for that. Yes, so Alibaba. Yes. Problem here is this was a stock that I intended to invest in. Oops. God. Sorry. Everybody can see this? Yes. Click wrong. So this was a stock that I did invest in for the long run, but I basically closed it, and it is in the long run expect enormous, because the Chinese economy will grow, it will become bigger than the U.S. economy, and the long-term perspective for this stock is that it's going to be absolutely huge. It's going to be a competitor to Amazon and so on. But recently it is very speculative, mainly due to its CEO becoming, vanishing and then showing up again and so on. I actually don't know if they found him again. But at this point, it is finding major resistance here at the green line, and that is the 100 moving average. So 270, that is where the major resistance is at the moment, and that's also historically where we have found major resistance in the past. So we've been here, is basically right in the middle of things. So these are the previous highs at 321. These are the very lows at 216, and we're basically right in the middle of those things. You can technically do a square like this, and you can see that we're nearly at the middle. So at this point, if we break above the 100 moving average here at the 270, then we could go to 322, and then find major support there. If we break above this, then we are going significantly higher. But you just keep in mind that you will touch the top of the Bollinger Band. The last time we did that, we fell quite aggressively, and these technical indicators, even though they're fairly bullish at this point, they look like they're going to turn around. So momentum at this moment, you can see the momentum for the 1 hour chart that is to the downside. For the 4 hour chart, it is also looking very bearish. So expect this to fall today. If you look at the stochastic, that is basically saying that momentum is to the downside for at least 4 hours, and you see after that what basically happens. But it is also finding major support here at 253. That is at the 50 moving average. So it's right in the middle of things, and has been for the last around 3 weeks. So yes, any other questions? I'm still technically waiting for a pullback in the stock market. And so, for example, the indices are still rallying, which I did not expect. No, happened here. Here. So what I did not expect it to rally again today, but it is getting very close to those very highs, and it is fairly likely they will fall sometimes this week. Yes, if you have any questions, you can just write to me on Patreon. I'll try to answer them as good as I can. So good luck, and thank you very much.